You're right there, but I hope we can eat some turkey in London this year. There is some shortage. So let's wait in a couple minutes more.
Did you say there's a shortage of turkeys in London?
Oh yeah, I was reading. Yeah, I was actually in Poland. It was reading that England has to buy from Poland and France, right? Because they are the biggest exporter of turkey. Because the shortage of people coming here to work.
Oh, I see.
Deborah is funny. Turkish all seem to be running countries. We all eat. That's the point. Eating. That's, you know, it's a national sport wherever you go. The 6. We wait another 4 minutes, Vidal, after we start. Three minutes. Okay, we start in 2 minutes. Okay, let's start. Thank you very much for taking part of first webinar. Now, this webinar is, I hope everyone can hear me. This webinar is the first. We have another one in January. And both webinars are for preparing our first pitch day, which will take place in February. And it will be monthly. So today and next January, we will talk about how to effectively and all the steps you need to take to pitch rightly to investors. Now, before introducing the two speakers, which are friend of mine and colleague, give me 2 minutes to explain to you what we are doing here in EquityMatch.co. So it's been always my dream since I started working venture capital, creating a place where I can have both investors and startup meeting together. But at the same time, I do believe funding is the last part of a startup stage. You need to learn how to be an entrepreneur. You need to learn how to improve your skills. You need to learn how to be knowledge to be an entrepreneur. Entrepreneurship cannot be taught, for sure not, but some tools and skills can be learned. That's why next year we are going to create our academy. As Far Hyder, which is going to speak today, will be part of it with other great professionals, and we will create other tools, and all will be notified to you before be released, and after, of course, be ready. Now, before leave the stage to the two speakers, during the two sessions, the speaker session, you can write, message some questions. We take the questions. We probably can answer all of them, or maybe yes, let's try. And we try to make our best to give you the right answer. Now, let me introduce the first speaker, Stephanie Toomba, a great friend of mine. And Stephanie will introduce herself, and we talk about how to effectively, actually, what do investors consider as an effective pitch. Stephanie, the stage is yours. Thank you.
Thank you, everyone. I'm going to share my screen. I have a little presentation for you. Thank you very much. I'm very grateful to be here. Thank you, Max. And so let me start by sharing my screen. This will stop. Okay, I suppose I will have to do that. There we go. That was quick. There we go. Everyone can see it? Is that okay? So what do investors consider as an effective pitch? I'm going to, this is the content of the presentation. I'm going to start by the introduction, introducing myself, what I'm doing, and show you what is an effective pitch to my view, I expect to be in the deck content, and what and how to pitch to investors. Oops. Okay, should I meet this person? Okay, I can't move. Okay. Introduction. So I'm Stephanie Toomba. I'm the founder of Toomba Capital. We invest in startups, and more precisely in seeds, meaning I invest in ideas. My background is in marketing. I love building brands. So that's why I'm at this stage of investment. I help startups that need funding to build their brand and their identity and the strategy for the future. So I am assuming during that presentation that everybody is familiar with all the wording that I'm going to use, like pitch deck or revenue or all these things. So I won't take the time to explain what they are, but if you have any question, please send them through that little box there. So what is the real purpose of a pitch deck? Everybody thinks that the pitch deck is the ultimate goal. To my view, no. The pitch deck is not to raise money. It's to spark interest, to have us as investor to know more about you, to ask for more information. It's to get a second meeting with us. That is a real, successful pitch deck. So what I expect from you is obviously, of course, it has to be immaculate. It has to be a solid deck that you introduce to us. But the real aim of a pitch deck is have a second meeting. It's just an introduction. It's like a first date. You spark interest, you're passionate, you share your story and so on and so forth. But that's the real purpose of the deck, like really the connection, check if we can work together, also check the synergy. So that's the most important thing of the deck. I don't care about you being a billionaire in 5 years and bringing money. If we don't get on well, or, if you're not accurate and there's no passion, I probably wouldn't invest. So that is very important to keep in mind. It's to see if there's synergy and, if we can work together and spark more interest, and having me and other investors ask for more documentation. So what is an effective pitch? For me, it showed through personality. You have to be memorable. You have to show your personality through your pitch. You have to show your passion, how much you like what you're doing. You have to tell your story. What's your story? How did you come here? Why should I invest in you? I need to know all this to be able for me to know more about you and your company and your idea. It needs to be effective and short. That is really, really important, because most of the time people tend to say the wrong thing. The more we talk, the more things we don't need to hear comes up. So I would definitely ask the startups to be very effective and short. And obviously it goes without saying, be clear and stay focused. It's very important to me, because, and for investors, to be clear about your idea, especially when you have a startup that is very technical, make it as simpler as possible and stay focused. I really insist on focusing on your startup and the idea and the story, because sometimes when we telling a story, all of a sudden we're talking about childhood and other things, while the real idea, as I already said, is focusing your product. Know your numbers. It's very important. I would expect you to know the revenue you're going to have, the profitability, the margin, your growth. All this needs to be known by you and be, presented to us. So that is very important. Engage. What I mean by engaging is engaging with investors, with the panel you're presenting your product to. I don't know, you can, if you have a product per se, you can bring the product and share and, engage with us. How does it work? Even if it's an app, why not bringing some iPad? You bring that to us and we try, engage with that, exchange, exchange your passion and show how your product work and talk to us, ask us questions. We love that. As obviously call to action, what do you want? What's next? You have the first pitch, and we know more about your idea, we know more about what you're all about. So what do you want? How much do you want? To do what? And how can you reach you? Can we reach you? Telephone, another call, email. So it's very important, because you can, you have your pitch, you introduce and you go and we're like, oh, no business cards and everything. And I've seen that, it goes without saying when I'm saying that now, but, even sometime in the decks, there's no email, there's nothing. So be careful with that and very mindful that obviously if we're interested for a second meeting, which is the ultimate aim of the pitch, is to have the documentation to reach you. So what is very important for me in a pitch, and that's why I put it here, let your business shine through you, not through your pitch. I'm a very big fan of a one-pager, to be honest, with just, introduce your content, your team, who are they? Business model, target market, USP, financial, future financials, milestone, all this in the first page. What I need to see is you. What's your personality, your passion? Why should I invest in you? And all this on a one-pager is great. I know that we have a tendency to have like a very long presentation, very beautiful and, like well presented. I would probably opt more for something that show, we can all see your passion through your personality, your body language, your attitude, the energy and the exactitude of your pitch, concise, concrete, and your product being here, we understand straight away what you're all about. Your presentation, I don't really mind, if I can see the product and I understand clearly. I would prefer to have an attention grabbing, machine with an impressive pitch, which would let me, I want to call her or I want to call him to know more about the product and possibly invest. So I will definitely opt for a one-pager. When it comes to the deck content, which is obviously the second part of your pitch and for us to study, I think it's very important to know who you are. Who is your team? Why should I work with you and your team? Because that as well, we're not only investing in you, but your team. And when I say your team, it's also the investors. Who are the investors that are part of your team and your company or your startup? And why did you pick them? what is their expertise? What are they bringing to the business? And why should I, join you guys? Because at the end of the day, it's like a marriage. It's like when you get married, I'm not only investing in you, I'm investing in your team as well. So it's very important for me to comprehend who are there, who are the rest of your team. When I'm talking like vision and proposition, for me, it's just a one sentence. It's, like, I don't know, be the Uber for private jet. Done. That's clear, concise, concrete. I understand it. Netflix for pets, I understand it. Concrete. Like, it has to be a one sentence that explains your vision and your proposition, and it goes with the problem. You have a proposition. What's the problem? What problem are you trying to solve with your service or product? Are you creating the problem, or this problem really exists? It's very, very important for me to understand where you're coming from, where this opportunity is coming from. What is your target market? How big is your target market? What the market size? And if you have data to demonstrate all this, please share them in your deck. I don't need it in your pitch, but in your deck, it's very important for me to understand that you understand your own market and that I understand your market through the deck content. So revenue model and business model. How did you get the money? Who pays you? When I say who pays you, it means like, who bring the money here? Is it advertising? Is it people buying your product or your service? I really need to understand how you're making money here, and what's your expectation and how is it calculated, and all those sort of thing. Traction, validation. This can be important, obviously at my level, because I invest in seeds, that I will comprehend that there's not really, but when you invest in growth capital and the sort of thing, traction, do you have already some clients? Are they buying your product? Why are they buying it? Validation. Are you already selling your product in Retros or Asda or Tesco? I'm talking retail here, but because that's the first thing that comes in mind, but can be anywhere. Where your product is right now. Marketing and sales. So if relevant, your marketing, what is your marketing strategy? What's your team, your theme, and your sales? How do you sell your product right now? What are the different channels used? Do you have a proper marketing in place? How all this is organized? Is it social media? And the list, goes on and goes on. Let us know how you're selling your product and how you do your marketing as now. And your competitors, who are they? Please, please, please. How many times I heard, I don't have competitors because nobody does it. Well, it means you didn't understand your market. You always have competitors. And in fact, if you don't have a competitor, there's no market. I'm sorry to tell you, but there's no market. So it means that, I'm sorry, unless even if you create a new product, you have a competitor that does it the old way, old-fashioned way. You have it. I'm sorry. So you always have a competition. So please do your research and let us know about this. Financial, I already said that, and obviously it's in depth. I'm not a big fan, at least in a deck content, of the big spreadsheet with all the details. I think at this level of negotiation, because investment is a long process, charts and tables work perfectly at this level. That's all I need right now. And obviously, showing what you see for the future, for your company, what the revenue, the margin, all this, all those figures being there, but being shared in a very explicit, simple process. And don't worry, the financials, most of the time, investors, VC, business angels, they already have their team in the background to do the job. If we're really interested, we will review everything you give us. So the big spreadsheet at this level doesn't, won't be necessary. Then the roadmap, what's your future? What do you want to do? Are you so passionate? You already see the different steps of your business already? Or, I don't know, are you willing to exit in 5 years? Are you expecting us to exit in 5, 10 years? What is the roadmap, even in terms of marketing and sales? Are you going to sell more product, less product? This is very, very important for us to know where you're going and consequently, where are we going? So yeah, so that's it for me today. I hope it was concrete and short enough for you to understand. And thank you very much for listening.
Thank you, Stephanie. Thank you so much. A very clear, straightforward speech. Thank you very much. Now, let me introduce to you the second speaker, of course, a friend of mine, colleague, Asfar Haider. Asfar will present himself and talking about how to effectively pitch to an investor. Thanks, Asfar. The stage is yours.
Fantastic. Really excellent to be here. I've just started sharing my screen. Just want to check you can see that okay?
Yes.
Okay, perfect. Yeah, so real pleasure to be here. Thanks very much for the opportunity. My name is Asfar Haider. I'm based here in London as well. And so I have quite a bit of experience building companies. In fact, I spent 10 years in New York, all the way through from 2000 to 2010. First company was a SaaS business. We raised venture capital and also from a lot of angel investors. And then I built a retail business as well, which has really helped me fully understand the SaaS world and also e-commerce and applications. These days, I run a program in London called the R3 Framework, which is really helping founders go from idea to funding and all the way through to scaled profitability. And so what I've been asked to speak about today is just like from the startup point of view, what do we need to think about? And in particular, a couple of really key questions. Firstly, how to pitch effectively to an investor. And secondly, around content, which are the main topics that I have to cover? How long should a deck be? And I've got maybe a different perspective to what Stephanie has, but it's almost similar. How should I present myself and the team, and how to present your commercial model and revenue model? So we'll talk a little bit about the content aspect. And then thirdly, what should a 5-minute pitch look like? So let's get into this. So the challenge that I see very often for founders is that getting in touch with investors is not that easy, and clearly getting investment is not that easy. And what we have to understand is the challenge is that investors see hundreds of deals, if not thousands. I think probably everyone's really aware of that, but the reality is that means that they have very limited time and attention that they can give. And so they're expecting to pass on 99%, if not more, of what they see. The third thing is that they rarely make solo decisions, right? There's usually someone in the background or a partnership. I mean, even Warren Buffett will have his investment officers around him to help him make the decision. And fourthly, we don't want to think of investors as banks, which is something I see very often. We think about investors as maybe the people that we go to get the money from. But in fact, we really want to be thinking about the relationship that we want to be building with investors. And the fourth point here around the challenge, which is almost like the opportunity at the same time, is that I know many founders are, that because they realize it's quite challenging to get in front of investors, they kind of resort to, building and bootstrapping and going quite a long time on their own. In fact, trying to really sort of own the thing all the way through. And while that can be a very good thing to do, clearly some people have been very successful with that. What we also want to remember is that investors really can be the gateway to solving, one of the biggest problems we're going to have in building a company, which is obscurity. And so if you think of what Bill Gates, I think there's been quite a few memes recently talking about the fact that, he met with so many investors and only a few in the end that invested, but they were the ones that made it really successful for him. So what can we do? What can we do around this? Firstly, we've really got to build warm introductions to investors. And I have a concept of 10-100, which is simply that you want to be identifying the 10 closest people to you that can be influential to help you navigate to a wide audience of investors. And you really want to be thinking about how can I build a list of 100, at least 100 potential investors for my business. Secondly, we want to be really resourceful and persistent. This is not something which is just going to happen that easily. Some of you guys might be new to this and may think that it's just about your product, for example. But no, the way to navigate towards investors, you have to be resourceful and persistent. Thirdly, this is really a test of leadership and confidence, without question. Someone with a not very good product can raise investment just because they have demonstrated that confidence and leadership in what they're doing. We want to be able to build the kind of know, like, and trust factor very, very quickly. So this is also important. And then lastly here is that we want to be thinking about how to elicit interest from investors to make them think it's almost like their idea to invest, as opposed to presenting something and sort of making them fit into what you think is the right answer. So many of you know the concept of red herrings, and so I like to sort of present this way to say that we need to watch for red herrings. And what are red herrings? It's like red herrings could be anything like investors saying, we only invest at a certain stage, or can you send me a deck, or I only have 5 minutes, it must be defensible, this sort of thing. Maybe they say solo founders are too risky, or I need to see meaningful traction. To me, these are all just what I would call red herrings. They're not really objections. They're not things that you should just run away from. And many people do. I see this very often. And so what we can do, the way we might want to think about this instead, is sell them anyway, right? So whenever you hear this sort of thing, don't take it really as a negative or as something like sorry, the door is closed. Think quickly about how you can get them to understand your concept anyway. So let's call it sell them anyway. And I'm going to talk about now, what does it really mean to sell them anyway? And it's nothing very, it's not like going with a hammer and kind of like trying to get them to sort of buy into your idea. I mean, there are ways to do this in a good, natural way. But first of all, let me cover another point that I was asked to cover here, which is around the topics and the length and the team of the content and information that you want to present. So the topics of the deck, how long it should be, and the team. My reference deck, the deck that I recommend to all the founders that I'm working with, is actually the Airbnb deck from over 10 years ago. I think it was their very first deck, or it's the deck that they used to raise angel money. I happen to absolutely love this deck. I mean, I'm not actively an investor right now, so maybe an investor would have a slightly different perspective. But what I love about this are a number of factors. Number one, it's super clear, right? It's a very attractive format. As you can see here, they put page numbers on the deck. They've got very clear titles. They've got contact details at the bottom of every single page. And the structure in which they presented all the information is really, really good. Now, they ended up with 14 slides. Sequoia and also Stephanie here said 10 is ideal, and that's totally fine. You could combine a few of these if you really had to. But that's the information. And this is over 10 years ago, and still to this day, this is still current, right? Now, the thing is, critical to this deck, and I believe is super important, whatever information you're putting in front of people, is that the problem, the solution, and market validation have to be crystal clear, have to be really compelling. This is critical information. I know many investors, I've spoken to many investors who say that if they haven't picked up on this information within the first 2 or 3 slides, they're not going to look at anything else, right? It's that black and white for them. Unless they look at a deck and open it up and they see, and they clearly connect with the problem and clearly connect with the solution and clearly see that there's some level of validation, and I believe this is consistent with what Stephanie just said, then they won't look at the rest of the deck. Why would they bother if they haven't really fully understood the problem? And I can also say that I've been working with many founders recently who have really interesting products, really interesting technology they've built. But the problem that they have, and part of the reason why we started working together, is that they couldn't articulate the problem. It was just too complex in the way they were presenting it. There was like this piece and another piece. And, trying to understand what they were really describing there was too difficult. You have to simplify this to something really, really easy to digest. Okay. And so you also want to be really prepared for searching questions that are going to come up. If an investor gets a little bit interested, you will get these questions. You will get questions like, how is the IP protected? What's the net margin here? How will you get people to adopt this? How did you come up with that valuation? Have the advisors invested in the company versus giving them incentive stock options? And who's on the board, right? These are natural questions that an investor is going to ask. And what we must do is have really carefully prepared answers for how you're going to respond to these kinds of questions. So another thing I was asked to here to just talk about was how to present the commercial model and revenue model. And I'm going to refer again to the Airbnb Deck because I think they did an outstanding job overall. And I also think they did a really outstanding job here on presenting the commercial model and the revenue model. And out of all the decks I've seen over the past, I don't know, 5 years or so, I think this is an area that everyone struggles with a bit because, you know, just describing the market sizing and then how that feeds into the business model and how it feeds into the financials is not that clear usually. In fact, they're usually quite fragmented. It's like you're looking at two different things. You're looking at the market size, then you go and look at the financials, and it doesn't seem to, there's no correlation, right? There's no connection between the two. And again, what Airbnb here, you know, what they did was really good. It flows all the way through. And I think this is really something to think about in terms of how you are presenting your information, you know, because you can do it. You can start with the market size that flows through to the business model, and that flows through into the finance you need and where you want to get to next. And here what they showed was that they could get to 84 million trips within, I think it was like a 2 or 3 year period. And they showed at the end there that they wanted financing to get to 80,000 transactions, which actually works out to 1/1000th of their market share. So they obviously could demonstrate here they had a big market. Okay, so back to the point about, you know, the sell them anyway topic, and combining this with, you know, a 5-minute pitch. I 100% agree with what Stephanie said about engagement. So we must focus on engagement through this process. If you were given just 5 minutes to speak with an investor, or even if, you know, an investor said, look, I've got a minute, how are you going to use that time effectively? And so what we don't want to do, and this is like what we could call a rookie mistake, is to think that, okay, we've got all this information in the deck, we know so much about how our business is going to work, and we're so confident that we're, you know, it's gonna, you know, the projections are amazing and it's all going to come through. What we don't want to do is to sort of do an information dump during that 5 minutes, right? That's not going to be a good thing. The amount of information people are going to be able to remember is so minimal that we don't want to follow that approach. So please don't do that. That's just not the right way to approach this. Instead, let's think about how you might want to start that conversation with an investor. And you could start something like, you know, you could say something like, you know, would it interest you to know, right? Something a little bit of a rhetorical question, something to, you know, get the person to start thinking. You could say something like, you know, even combine this. Would it interest you to know that our system works better than Yahoo search? This is probably what Larry Page said to his first investors, you know, for Google. And you're looking for that kind of point where the investor sort of says, oh, really? Oh, that's interesting, right? So within 15, 20 seconds, you can already get a little bit of engagement because they've understood kind of the context and they found it interesting to talk about. And then to take it a little bit further, to get a little bit of permission here to now present what you're talking about. So you could say something like, can I take 30 seconds to share a couple of interesting things, right? And then naturally the person, because of the first point, they're going to say, okay. But the key thing is you've asked for permission, right? You've not just like assumed that you can now just like, you know, shed a load of information on that person. And then thirdly here, then once you've got that little bit of permission, you could then deliver that, you know, so you could say your number one and the two things that you've said there, and do it in 30 seconds. And this is important because you've said, can I take 30 seconds to share a couple of things? And so now you want to deliver a couple of things and do it in 30 seconds. And the reason why this is so important is because you're going to be able to build that trust, right? You've done what you've said you're going to do. Now, this might sound a little bit simplistic or something, but it really is a very important thing. It's like the subconscious is working more than you realize. And so you might want to end this by, after that just 30-second thing, is to say something like, you know, does the idea make sense to you? Do you like the idea, right? So we want to engage. Each of these points that I'm showing here are bits of engagement. And this is going to help you. And hopefully you're going to, by this point, you know, they're going to say something like, well, that's interesting. Tell me more. And you're going to get a little bit of a lean in to your presentation or to your 5-minute pitch here. So now you've got out of this 5 minutes, you've got maybe 3.5 minutes to communicate the meat and potatoes of your pitch, what you want to say. So I would like to recommend that you cover you've got to think about 4 really, really important things. And this needs to be scripted because it's very hard to kind of really think about these things on your feet and just like give the relevant information. So you want to pay attention to this, but there are 4 really critical things. Firstly, you want to be showing that you have a superior offer. And that means that your business is positioned well in the market, you've got some validation, you've got some proof, that sort of thing. Secondly, that you have or could have superior cash flow. And that means you've got a revenue formula that is better than what else is out there, right? Or you've got a funding strategy which is going to generate some income alongside maybe the main product. Thirdly, you've got a superior product and service, and that's relating to your marketing, the tech, maybe net promoter score. And fourthly, that you've got a very clear route to market dominance. So again, as I said, you want to be scripting this, you want to have that prepared. This should be in your back pocket always. A previous CEO of mine always said that he would literally practice in front of the mirror, right? Almost every day, presenting his kind of his pitch to himself. And then finally, you want to be asking for what you need, right? Don't forget this piece. So you could say something like, would Wednesday at 8 a.m. be good for us to meet and go through this in more detail? So that's really the recap. Now, what I've described here, by the way, you could also do in a video, right? So this is not necessarily something that you would only use when you met an investor in person and you only had 5 minutes. You could do this even on the telephone, right? If you got through to somebody, you can follow the same routine. So that's it. And in summary, I would say like 5 minutes is all you need to avoid obscurity. So my name is Asfar Haider, and happy to answer any questions anytime. My number's there, and I'm also you can also connect with me on LinkedIn. Thank you.
Thank you, Asfar. Thank you so much to both of you. Now, let me check if we got some questions. Okay, for Asfar, this is more technical. If it's possible to review one deck and give some feedback. This is up to you, Asfar.
Yes, of course, no problem at all. Yeah.
Okay, Malka, we share everything between the founders and you. Anyway, if for Stephanie Asfar is fine, we share their contacts and you can be in contact with them directly, both with Stephanie Asfar.
Yes,
now,
perfect.
That's okay. Now, because we don't have any questions, for me it's fine because I like to talk. Let me start, okay? And if someone wants to follow Deborah, for example, which is I know likes talking more than me, absolutely, please, Deborah, come. So now I wrote some questions. The first one is for Stephanie. What really impressed you? When you have a founder in front of you, what really impressed you? It's the founder is charismatic, like we work, for example, but ended up, we all know, although now at an IPO, or something different, more technical. I don't know. What have impressed more to you?
I think the idea and a clear roadmap really impresses me, knowing that I have this product and without I'm not talking being surrealistic here and say, oh, in 1 month, I'm going to sell 1 million of things, but having a clear roadmap as to the product, we're going to start with this, and then in 2-3 years time, we're going to develop a range around this product, and we want to exit in 10 years because I want to focus on other projects. I think for me, it's very, very good. And this really impresses me when someone knows where they're going from the beginning, because they're passionate about X, Y, Z at the minute, but they also know that there are other things around this product that can be, improved or, have other sisters product, or brother sisters product, as I like to call them. So I think that as well. And obviously the passion around the product, you know, and someone share their passion. And one of my motto is passion first, business second, you know. So for me, someone that love what they're doing and then can really communicate that and has the best energy ever, it's like, yeah, it's what really interests me. And you will be really surprised. It's not common.
I know. I mean, I have to be honest. What really scares me is when a founder walk away, they start fighting. I invested in one company, they start fighting, and the company has been completely destroyed. I lost my money. That's okay. When investing in seed, we know perfectly that it's worse than play poker. But it's very bad when you fail, not because of the business, because of the founders. And this is why I always say, you need to be very focused on funders before the business model, because they come after. Right? Startup without funders is nothing. It's a piece of paper, and that's it.
Yeah, yeah.
So
Like
idea cheap.
Invest in the joker, not the horse.
Yeah,
the personality. Yeah.
I have one question from Deborah, but let me see if we have others. Okay, and Deborah is asking. Let me go back. Are we asked to Asfar in this case? What are deal breakers for both of you? For both of you, you can start Asfar.
Yeah, sure. I would say there could be deal breakers at any time, right? There's all sorts of different things, and deal breakers is maybe different to an objection, right? So by the sound of deal breaker, you've already got a deal underway. Therefore, you know, you've got some sort of, you know, you're negotiating some contracts. So this might indicate to me maybe a due diligence thing. You know, talks can really break down over due diligence. There can be things that you hadn't shared. There could be things that, you know, come up during due diligence that you should have shared during the, you know, you know, trying to find the investor in the first place. So that would be what I would say there. And, you know, deal breakers could be anything to do with maybe new information emerges about competition, the market changes, the economy changes. So you've really got to be watchful about all sorts of things there. But if we go back, if the point was more about, you know, just you know, being able to get in front of investors in the first place, like I said, we don't want to take any kind of negative comments or anything too personally. We want to just like go for it anyway and see what we can do. So.
What about you, Stephanie?
So I'm assuming it's a deal breaker in the pitch, right? As far as, you know, okay. So to my view, firstly, I already said it, that would be saying that there's no competition. I mean, like, it means like clearly you haven't done your research, because there's always competition. Secondly, I would say baggage. When I say baggage, it's like not having the right team, founding team, having your friend that has nothing to do with the business and don't understand anything, or having an investor that has already heavily invested in your business and you don't have any equity left anymore, or very little for us to have some leverage here. So I would say that would be the two biggest deal breakers to my view on that.
Thank you. Let me see. Oh, we have some few questions now. How long should be a pitch video be, Stephanie?
Video.
Yeah,
I would say 6-7 minutes, not more than this. You know, at least, yeah, for me, 5-6 minutes is perfect. It depends what in which stage, but I'm assuming like, yeah, first investment, Series A seeds, yeah. 5 to 6.
Yeah, I mean, I have my opinion on this. The standard is 5 minutes, okay? So, for example, in EquityMatch, we run now 5 minutes pitch, and after we talk, as we are doing now for almost 30 minutes, but in our biz talk. But sometimes I do find very struggling for entrepreneurs to tell you the main in 5 minutes. They will miss for sure something. This is why I do believe when they do 5 minutes, they should just focus on 2-3 arguments, right? 3 topics. You can't cover a deck in 5 minutes. It's not going to happen. Yeah. It's impossible. You make just so much confusion. And I think you should, I mean, that's my opinion. And I hope, I mean, you have something different, but I do, they should cover some main topics and that's it. And leave the rest to the deck be written after. But that's my opinion, of course. Now, I did a pitch preview and one investor say to start with social impact and another say to start with that, with what the product is. For the social impact, we are going to a very nice next year webinar where Deborah will take place. And but this is for you as well. What do you think? How an entrepreneur should cover the social impact, and it's important or not? I do believe so. For Asfar.
I think it. Yeah, I think it's very important these days, and not only for you know, just also just your. It's demonstrating, I think, a leadership aspect of you and your team, right? Where you want to take the company, how you are thinking of how your business is going to exist over the coming decade, right? I mean, if your business is not really contributing to some sort of social impact improvements, then, but you still need to be thinking about it, because actually you might have a hard time attracting the right employees if you're not thinking about social impact, right? So clearly there's an important thing there around social impact, but it really needs to be, you know, something of a strong value across your leadership team. That's really important, and it's got to come across that way.
Absolutely. I mean, I had a very prolonged talking about when it comes to ESG, impact, social, minority, and a very nice talk 2 days ago with a guy in Kansas. And he created this digital magazine in Kansas City, extremely popular. He's a pop star, this guy, and only focus on minority, right? Now, he moved from minority to black because now we have the Black Lives Matter. But I do believe, I mean, we are there. There is nothing to do. We need to deal with the impact we have on the society, and we need to deal with the impact we have on the environment, the climate changing. So we can miss it. And I agree that I would like to see in any pitch deck something mentioning what's going to happen to that, how their action will affect positively or negatively the social equality and the climate. Now, let me move to another one. What is your thoughts, Stephanie, for the founders who only have an idea about a product process? That's a very pre-seed stage.
Yes. Well, I suppose it depends what the product, what the service we're talking about. Obviously, when we say seeds, it's never just an idea on a piece of paper and nothing has been done, because at that stage, I would think like, okay, you need to invest a little bit of time to show me that you're really committed to your idea. So obviously, I would never, you know, invest on a piece of paper. When we say ideas, is at least, I don't know, you have samples, you have done a little bit, you committed to your project, at least, unless, and that happened, in fact, to the new project I'm involved in. We meet and we're talking together and we have an idea in common. And yes, I will invest in the idea and we will, we will go through the whole process together. But as investment, just coming with an idea, no, that would be a no for me.
It's very complicated. I did it once. It's been a nightmare. It's very complicated. You need to be very lucky. I don't know how great you can be to understand an idea, if it works or not, because as I do believe, and I always say to everyone, ideas are very cheap because it doesn't cost you anything. You can wake up every day with an idea. Execution is mandatory. Just few people in this world can execute. That's it. This is why many times they said to me, I don't want to disclose my idea because they will copy it. They say, I hope you are kidding me. Because even if they copy your idea, you've done nothing. If you don't execute the idea, you've done nothing. So your idea has the value between 0 and 0, right? So you need to execute. You need to be a very good executing idea, because otherwise you've done nothing. I mean, I honestly do not believe that many people understood, for example, Facebook, right? In fact, they struggled to get some funding, and now is one of the most valuable companies in the world. So why? Because maybe the idea was not that great, because not that many people actually understood it, but the execution was unbelievably great. So chapeau, there's nothing to do. So let me.
I can just add one point as well on the the topic of idea stage or early stage like that. One thing I would say is that if you're at early stage, that's clearly okay. But what you need to be demonstrating is a really, really strong understanding of your customer, right? It becomes more important. And, you could call this micro traction. In fact, I think some of the blogs online talk about micro traction. So you might not have real traction, in other words, real revenue coming in, but you might have micro traction, which might mean a level of interest that you're getting for your idea. I know that some consumer investors wouldn't invest in something unless the app has something like 50,000 people on a wait list, right? You could consider that kind of like micro traction in some way. So these are indicators that you have something that you put out there, and you've got something's resonating with the marketplace. Or if it's a B2B application, you can really show that you really truly understand what is happening on the customer side and how your solution will integrate into their world. So this can make up for the fact that you're at idea stage or early stage.
I mean, knowing your market is mandatory, but just few people, they know the market. They pretend to know, but know the market and doing market and marketing research before start your business, very complicated. This comes to valuation, but maybe we talk later. Let me see. It goes to energy and generation sector. Okay, how should the pitch be if you want a lot of funding? That's a big problem, like energy generation sector. I mean, it can be expanded to any fundraising, because one thing is fundraising for 200, 300K, and one thing is fundraising for 50 million, right? So Stephanie, what should a team in the pitch and a company have to get so much money, in your opinion?
A strong team, obviously, that goes without saying. A strong idea and be at a stage. And what is big? What is big funding? 1 million, 10, 15? So it's very important to understand what is big funding for you and at which stage are you as well. And so that will be helpful. But more importantly, if you need a lot of money, you need to have and to justify it. Why? Have a clear roadmap, have a clear marketing strategy, sales strategy. Where are you going? What this money is going to be used for, and have a very clear financial statements as well. But I'm really going to focus on the team, because I've seen a few questions here where there's no team, the people are on their own. I mean, like, this sort of like investment, and obviously when you raise so much money, it needs to be justified by the size of the team as well, which means that for me, having a big team is a variety of ideas. It's also the possibility to be critical. You have an idea and you open your doors to other people that might improve it. Or help you make it better. And when you're on your own in your little box, you tend not to have that openness, if I may say. So strong team, strong financial statements, explain why you need that money, and the marketing plan, the sales plan, and everything else.
I do believe so. And again, when it comes to big funding, valuation plays a huge role, okay? Well. Because if you ask it 50 million, unless you're willing to lose all your company, your valuation is to be very, very strong. which means your fundamentals has to be unbelievably strong. So all goes together. So many times funders, especially when they are very young, they do not know exactly how the venture capital environment and works. They come with 10 million. Yes, how much you want to willing to lose? 10%, which means your company today is worth 100 million plus money. Come on. This is a big deal. Maybe we talk in the end about valuation because I have so much love when it comes to valuations. I mean, it's sometimes very funny. So do you think investors could be still interested in natural cosmetics brand, or is everything moving to only tech company? So I will give this to Stephanie because the next one is for Asfar. What do you think, Stephanie? Cosmetic, you come from there.
Yeah, going from there. Well, it depends as well of your brand. Me personally, I haven't invested in cosmetic yet or fashion because as if you had Googled me or you're connected with me on LinkedIn, you know that I worked for L'Oreal and for LVMH in the past. I personally wouldn't unless you have a very specific style or innovation in your product. Of course, I would in the future, but I haven't seen that yet. It's like, as a joke, I said to some of my friends, and like, if you are able to produce a fabric that allows me to feel hot and to feel like warm or cold, adapting to the weather, I'm all in. There's so much brands these days that is really difficult, and fashion and beauty really pump money. It's a lot of money when you have first. I know that my money will be diluted at some point because it will require so many rounds that at the minute I'm not really interested, but it has to be innovative.
Thank you. This is for Asfar. So transparency is important. For instance, Arya found his stock on, not hide it by being upfront, so there is no nasty surprise during the due diligence. That's a big deal. Transparency. That's all for you, Asfar.
Yeah, and I actually, my response was, you do need to be transparent, right? Because otherwise it's just going to come up anyway. But what's interesting about this, and I've thought about this, I've seen opportunities like this before as well, where the thing that you're obviously talking about, whatever the thing is, can actually be the way to connect with the right investors, right? Let's say you're in a very, very competitive market space. It's a SaaS product. You know that you need to have, a lot of, experts, maybe let's take that example, right? You've got to have deep expertise in a certain area to be able to make this work. And so you're kind of stuck on that. Well, this could be a way to find the investor in the marketplace who's actually solved that problem before, right? So this could work to your advantage. But in any case, yes, I mean, there are things that, you really want to bring out onto the table if they're going to be problematic. One thing that often does sometimes come up is that, you might have raised money from somebody, but now they are not investing in the next round, right? In fact, that first investor wants to get out of the business. Well, so what do you do there, right? This can be quite problematic. So if you try to hide that, it's going to be a problem because it's going to come up, and then actually the new investors are going to be quite a little bit annoyed that you didn't sort of, share that. But you could somehow work at your advantage to get an agreement with that first investor in a way that, that they quietly leave, and you find a different way to build a relationship with a new investor. Just throwing some examples out there. But yes, it's definitely something you've got to address. You cannot ignore the elephant in the room if that's the case.
Also, you need to be transparent. I mean, you can, in any way, you are accountable for what you're talking about. So you're wasting just time and nobody is coming back to you. And the venture capital market is very small. Everyone knows each other. So do not be transparent, which means lying. It's not the best way to get funded, and probably is not at all the way. So be transparent. That's it. There's nothing you can do. So do you look at the age of the fund as a factor, Stephanie?
No, because I've been judged myself as a, like I have a lot of people. I would never do that because a lot of people in my field, obviously I'm a female, and then I'm like, oh, I was doing that, you were a baby, or maybe you were not even born though, so no, I look at the idea. But I have to be honest, sometimes the age transpires through the deck and the vocabulary and what people say, but I wouldn't look at that. I don't mind.
I do agree. I don't know, sometimes for some kind of sector, like for example, social, I have to say without taking any side part, but I sometimes prefer young guys when it comes to social application and something similar. Or if you have to talk to project, more substantial project like infrastructure, for example, maybe I'm not going for 20 years old founder because you need too much experience. That's the problem, right? You can't run 1 billion infrastructure project if you're 20. You need to have so much experience. And this is when it comes to investing in, for example, sustainability in terms of helping the climate. A lot of this is infrastructure investments, which requires so much money. It's very complicated. Less complicated, probably, but I'm not saying easy, is branding an application, a marketplace. Maybe it's not that complicated. So sometimes I like the hedge, to be honest, but also what I really love is the excitement that 20 years old girl or boy comes to you because they're so excited. They want to restore the world. I mean, they do believe tomorrow they are the next Facebook or the next Bill Gates, which is lovely. I said then, just don't fly, please, work. But yeah, sometimes age makes a difference. Well, but of course, everyone can be successful. Everyone can fail. What if I do not have a team? I'm a standalone founder. So can you take this one, Stephanie?
Yeah, sure. Well, it depends. What is the team? Because there's different ways. Firstly, I'm really not for solo founders. Like I have to be honest, because it can be very, very risky. But I am understanding where some funders are coming from, because I had that discussion with a lot of people. I don't want any partner. I don't want to share. I don't want to give away some equity, blah, blah, blah. You name it. But there's different ways to have partners or a team. You can have a board, that I advise it to every startup. Have a board, a non-executive board or whatever you choose, and you give a little bit of equity. You don't need to give 10, or at least some bonuses or anything. I don't know, pay for that trip when you guys have a meeting. I think it's very important to be open. The only way you can be open-minded and be successful, to my view, in your success, is to be open to other ideas and opinions. And if you're on your own in your little box, like I was saying earlier, I find it difficult to believe that you will be open in any marketing changes, sales changing, or strategies and things like that. Of course, you will bring the money, but how is it going to be? Are you going to be defensive about that? Are you going and to check that? For us, it will be to have already a team. We know that you're open-minded and you're open to the ideas that are brought in your team. And when you have a board, you can have a board with a finance person, a legal person, a marketing person, a salesperson, and every month have a meeting. As I said, little equity, 1%, 2%, depending, what you want, and still have power on your company. And ask them every month, look, here the strategy I have, here the improvement I have in the product or service. What do you guys think? And they give you opinion. You take it or you leave it, but at least it shows that you can work with a team. As I said, there are different ways.
I agree. Be a standalone founder. You have so much on your shoulders. You can't take care of it, everything. And it's very complicated. I have to say, I don't know if Elon Musk had a co-founder on Tesla. PayPal for sure, Tesla I'm not sure. But it's very, very complicated, extremely complicated. Even to not only convince investors, but also running the business. As far as for you, can you include a financial model template in an investor pitch deck?
Well, I mean, you can, but I don't think you want to go into that level of detail too quickly, right? I think the whole point is to, as Stephanie said earlier, you're using that deck to, for a very specific purpose. In fact, I actually like the idea as well of a one-pager to get, to open the door, to actually make that first connection, and to save the deck for the, an in-person meeting. That would be ideal, right? You'd go there, you'd actually open up the laptop and you'd make that presentation using that deck that they haven't seen before. I mean, that's the ideal case, because then you're saving the juicy stuff for, when you're actually in the meeting. And the thing about the financial model is it can be very misconstrued, right? Someone could open up a financial model and take away the wrong information or take away the wrong ideas from that. So actually, ideally, what you want to be doing is walking an investor through your financial model, sitting side by side. That would be the ideal case. And you can do that. You could, there are some examples of good examples, frequently examples of founders who've been quite rigorous around that. And they have, an investor might have said, yeah, can you send me your financial model? And instead of just saying, sure, here it is, and then just zipping it over, they've said, look, instead of me just sending it over, why don't we set up a time, Wednesday morning at 8 a.m. where I can walk you through it? And even if the investor says, no, we'll just send it over. You say, well, look, I've been through this before, and I find that it's a very productive thing if I actually sit with you and your team to go through it. So you can, if you really want to communicate things very clearly in your financial model, which I think you should, then you want to be pushing to get that time so that you can take people through it in a very structured way. That's going to get you the most results.
I agree. I mean, I believe sometimes you have founders, they write you the cash flow for the next 10 years, which is not going to happen. So I do believe more than writing an entire financial model with cash flow, EBITDA, and so on, which is, if you are at C stage, it's going to be very tough to follow. You are going just to fail what you predicted. Maybe create the model, how you're going to make it money, and maybe create the flow for the first year, or maybe the second. Don't go for 10 years because there is not going to way. In 10 years' time, economy will change so much and the market will change so much. You are just wasting your time. And that's it. There's nothing to do. And okay, Stephanie, that's for you. What's the ticket you're investing? If you want to say, of course.
Oh, yeah, I want to say it really depends. Like anything up to, we've done $500,000 for the moment. That's with the highest, but bear in mind, we're pretty new. We are like 5 years old. And I worked in the industry a year and a half before. As I said, I was a marketing person in the beauty industry. So everything, like, I'm still learning, but yeah.
Okay. Now, if you have a smaller team of 2 people, would you recommend finding more potential team members before seeking investments? Stephanie?
I think 4 minimum is a good team. But that would be interesting to know your field, the industry you are in. But I think 4 people is great.
Okay.
4 to 5.
Now, I believe we are covered enough. We have been very good in having everything just up to 1 hour. It's 5:15 here in London. So, first of all, before I close this webinar, I want to thank my team, EquityMatch.co team, because without them, we would never be here. So they made it, and really thank you to all of them. And of course, thank you all of you guys for taking part of this webinar. It's been very exciting. It's our first one. It's going to be the first of many. And now let me close with this one, which is, I hope can help you. When I was a young boy, my dream was not to be an investor, absolutely not even to be an entrepreneur. It came after. My dream was to be an actor. So I went to Rome to study acting. It was beautiful. So back then I was living in Italy. And the first day in the academy, the teacher, the director told us, we are 44 today. we maybe will be 20 next year, maybe 5-10 for the last year. We ended up in 5. And after he told us 1 out of all of you will be an actor, the rest won't. That doesn't mean you will lose, you failed. You're not going to be an actor. So for the people who are still on the webinar, I can tell you, the startup ecosystem is very tough. Maybe 1, 2 of you will succeed, all the rest will fail. And this is 100% because that's the rule. It's always been, always will be. But doesn't mean you are failing forever. A failure today can be a success tomorrow, if and only you will learn from failure, you will learn from the mistakes, and relentlessly, you will try again. And by then, try again, the door of success will be open to you. When you startup is a very tough job. Being an entrepreneur is not fun at all. It can be very pleasant, but can be a nightmare because you are not going to sleep at night. And when you get the money from investors, you need to respect the money. Money, they do not come for free. There is no way. So the only way you can succeed in a startup is be very resilient and do it again until you had these things done. Resiliency is the most important thing when it comes to startup, as well as persistence. So I really hope you had a good session with us. I hope to see you again in January and see you in February when we had the first pitch day. Anyway, the team will let you know, notify everything when will be the time. Thank you so much. And have a great evening for the one who is evening, morning or night for the one who is morning or night. And again, happy Thanksgiving. Bye.
Bye, everyone.
Bye-bye.